Hello and welcome to the recap of our lecture on Group Statement of Comprehensive Income. Remember, SCI stands for our Statement of Comprehensive Income. So how are we going to deal with this? Remember, we can't just do our 5 workings for our Statement of Comprehensive Income. We need to deal with all of the things that could come up step by step. So for income and expenses, well, we're simply going to add across the income and expenses of the parent and the subsidiary. The only time we won't fully crosscast is when we have a mid-year acquisition. So if the subsidiary is acquired mid-year, we'll time apportion the income and expenses of the subsidiary for that time. Because prior to when we acquired them, we don't have any right to their income and expenses. So we need to time apportion them if we have a mid-year acquisition. For intercompany items, well, remember for sales, we need to remove those from revenue and remove them from cost of sales. That's all of intercompany sales in the year need to be removed from revenue, removed from cost of sales. So debit revenue, credit cost of sales. For any perps, well, we'll add those to cost of sales. So calculate your perps and add it to your cost of sales. Do note that also if the subsidiary is a seller, that will affect our non-controlling interest working for our income statement, and I'll talk about that at the end. When it came to fair value adjustments, we needed to remember any additional depreciation. Remember, that would affect our income statement. Again, we'll add that to cost of sales and we will adjust the non-controlling interest for their share of it. Goodwill impairments we need to look out for as well. So this would be an impairment loss, which is an additional expense. So we need to look out for those. Also, if it was gross goodwill, we'd need to adjust our non-controlling interest in our income statement. So our non-controlling interest summary, remember what we would do was we would get our group statement of comprehensive income. We would get down to the bottom of it and we would get the group profit. Now we need to split that profit between the non-controlling interest and the parent. So how do we get the non-controlling interest portion of it? The non-controlling interest portion always starts with the NCI share of the profit of the subsidiary in the question. So look to the question that you're given. What is the profit of the subsidiary that we're given in that question? That is your first line. So share of profit of the subsidiary in the question. We're then going to adjust that for any adjustments that we have made. So for example, if we have additional depreciation, we'll need to subtract the NCI share of that additional depreciation from that original profit in the question. If we have any perps where the subsidiary is the seller, we need to adjust that profit for that as well. So we'll subtract any perps for the NCI share if they are the seller. And if we have a goodwill impairment, so an impairment of gross goodwill, well, we'll adjust the NCI's profit for that as well. So make sure you learn that NCI summary. So that will get you the NCI share of profit for the group. The balancing figure will be the parent's share of profit for the group. So we did this for illustration 19. We did working 1 as usual, checking the date acquired to make sure it wasn't a mid-year acquisition. For the intercompany, we did the sales and the perp. For the net assets, we needed this to calculate goodwill because there's going to be an impairment. But we only needed it at acquisition to get that impairment. We also then needed to calculate our depreciation. We then calculated our gross goodwill impairment and allocated that out. We needed a working for cost of sales because there would be few adjustments going through that. And we needed a working for our non-controlling interest, i.e. the non-controlling interest share of the group profit. So roughly speaking, those are the workings that you will need for an income statement, and you need to make sure that you know how to do the NCI share of profit for the year. So that was our recap of the group statement of comprehensive income.